Good morning. So hope everyone had a good time last night. I know I did. Sure everyone's probably a little bit tired this morning. Been a lot of presentations. Unlike Justin in the whiteboard, I do have a presentation and a PowerPoint. I've been here at Brokers Alliance for a little over 2 years now. There's many of you out there that I do work with already and have been working with for some time. Many of you that I'm meeting for the first time, and it's been a true pleasure. A little background on me. I've been in this business for a little over 8 years. I started off this business with some great training at the Northwestern Mutual, where I had a nice practice for about 4.5 years. Selling everything from whole life insurance to disability insurance to managing money to long-term care insurance. And I had a budding practice. And then I had a carrier call me and say, "Hey, Aaron, we heard about you and we'd like you to come and, you can come here and just do estate planning, primarily working with corner office guys, writing big tickets on the life side." So a lot of my background is on the life side. Before I came to Brokers Alliance, I had met David and Eric, and I was working at an RIA shop down in Scottsdale. I have 4 securities licenses. So, I think I have a pretty well-rounded knowledge base. There's not too many things I haven't come across, too many products. Being an agent, coming from being an agent out in the field, I think I bring a truly different perspective to you guys out there. I've spoken to Cheryl Moore quite a bit. I've spent some time, I've never worked at another IMO. I've met a lot of guys. From what I've been told, a lot of marketers at different IMOs, don't have the field experience. Well, I do. So a lot of times when I design a case, when I'm talking to you about your clients, I'm trying to figure out and I'm trying to, ask you a bunch of questions to really get down to what can I say to help you really present this product and this process to your clients so it's going to make sense to them. There's that old KISS, KISS. Keep it simple, stupid. It really is trying to make these products can be very complex. Index products have a lot of moving parts. I remember, it's a funny story, I met Eric Palmer from the RIA shop that I was working at, and I sat down with Eric for probably a half hour. Again, I'd been in this business for a while. And I said, "Eric, I want you to show me these index annuity products and tell me how they work." Well, it wasn't a half hour. We were probably sat there for an hour. We probably went over 3 or 4 different products. And my head was spinning. I had no idea what he was talking about. I mean, I really just sat there and I'm like, man, it took me a lot more home studying to really wrap my arms around these types of products. So I know we have a lot of life insurance guys out there. Life insurance, everything from IUL to term insurance, our great WRL product that we have. So coming from the life side and transitioning to being an annuity marketer has really been unique for me. When I started here at Brokers Alliance, one of the things that Eric said to me was, "Aaron, it's going to take you some time to really, really understand everything." And I'm like, thinking to myself, I'm a pretty confident guy. I said, I don't know. I said, I thought I was going to really get it down really quick. Well, he said one thing to me that I think is truly vital in my role and working with you guys is you need to understand how to sell or beat every single product out there. And that's what I'm really going to talk about today on my case study is I had an agent, who called me up. And that's why it says, working with a marketer, the proof is in the pudding. This agent called me up. It's a guy who's been a huge life producer for us. And, he said he's been trying to get into the annuity markets, and he calls me up and he says, "Hey, Aaron, I have this client. He was a doctor, male, age 70, $180,000 of non-qualified money, and he needs income immediately. You can wait 1 year, that's not a problem. He actually just bought an annuity. He said, really? Okay. So he just bought an annuity from an agent, and he's coming to you and saying, what do you think about this? So he called me up, and and I said, okay, cool. Well, tell me a little bit more. And so what I did was, this is what kind of, Rich and I have to do is we have to internalize what you're saying to us. So as he starts talking to me, hey, Aaron, I bought this, North American, my client bought this North American product. He wanted to take income in 1 year. North American, as many of you know, is a great company. But there's many factors that, as an annuity marketer, we try to internalize. Number one is being caps. How much growth can these products truly get over time? These are a lot of questions that, as agents, I hear every day, all day long. Caps, bonuses. Do you need a 5% bonus? Jim Codney's over here. He's going to talk. They have a 10% bonus product that just rolled out. Payout factors. There's some, every carrier, it seems like, over the last 6 months has reduced their payout factors. Roll-ups. Genworth and Justin just got done talking about an 8% simple interest roll-up. Well, do you want to look at a compound roll-up? What do we want to look at? What are we looking at here? Comp. So these are a lot of factors that, I have to take into effect and think about as you're talking to me about your client, about your case, and, at the end of the day, they all end up fairly close to each other. So, comp can be a really important factor because you guys work really hard to find a client. And if I have 3 products from all the questions that I ask you, and they're all fairly close, then we want to also look at what's going to pay you the most, because you work so hard out there that you want to make sure that you get paid as well. Okay? We represent, I want to say, somewhere around 40 different insurance companies. And I always tell my agents, hey, look, it's your job to be out there in front of people. You don't have to be a product expert. That's what you need to rely on us for, is to make sure that we know our products. And when you call me with a case, I can say to you, hey, you know what? Here's 2 questions. If you guys want to get into the annuities and you haven't already, these are 2 questions that someone said to me once, and I've never forgotten them, and I still implement them every day. For those of you that I already work with, yeah, I'm sure you've heard this before. If you call me up with a case, I'm going to ask you 2 questions. Is this live-on money, or is this leave-to money? Because I don't, whatever people tell you, almost all their assets fall into those 2 different categories. Live on, meaning they need an income stream from this, or leave to, meaning that they don't need income from it. It's probably a non-qualified asset. They just want it to grow, and they just want it to get as high as they can, maybe a death benefit feature on it, and pass it to their beneficiaries, and type of a legacy planning. Okay? So let's move on. So when you call us up, the first thing I'm going to do is I'm going to ask you about the case. Tell me a little bit more about your client. Tell me a little bit more about this asset. We're going to talk a little bit about product. Try and narrow down all these carriers, all these products into, maybe 3 or 4 that make sense, and we'll start to talk about them, a little bit more in detail. Some of the things that I like to provide my agents, I'm going to send you a rate sheet. Rates are constantly going up, going down, and it's tough. I do this, all day, 10 hours a day, every day of the week, and I can barely keep track of all the changes that happen at the carrier. So a lot of times I don't expect that you have. So I'm always going to try to send you the most updated rate sheet, product guides, to make sure that if there's any specifics about the product that you have any questions about, that you know everything about the product and everything that I tell you. Income illustrations. Most carriers, that Genworth illustration was great. Not only did it show, some carriers offer income illustrations, other ones will provide an actual account value illustration and how taking income affects the account values, okay? Not every carrier does that. If I can use the carrier's website and the carrier software, I will. But what I'm going to show you today is, so as I started to work on this case with this agent of mine down in Florida, it made me think about our website and what Rich was talking about earlier. You have the ability to go to our website at any time and search multi-year guaranteed rates. You can search just regular traditional fixed products. You can also search index products and just try to find those differences, the caps, the bonuses, the comp, and all that. It's all up there. But what's also up there is the Insight Illustrations tool, which you also have to register and request permission to use. And that's really what we're gonna, what I'm gonna show you is what I did with this one specific client. So, as this agent started to talk to me about this client and how this client had just bought an annuity, and he told me what product it was, 70-year-old, wants income in 1 year. My head's thinking one thing, this client bought another. Okay, cool. So this particular agent, like I said, he's a huge life producer with us, and I've been trying to slowly educate him on the on annuities, whether they're fixed or indexed, and then how to implement them in his practice. Okay, so he had this client. He said, "Aaron, tell me about this." And I said, "You know what? Why don't you get your client on the phone? Okay, why don't you use me as a resource? And I'd love to help you. Get him on the phone and let's talk to him." Okay, so he called him up, called the cell. We start talking. I said, "Hey, Dr. Lewis. So you met this insurance agent, he sold you this product, right?" "Yeah, and I said, David tells me here that, you need income in 1 year. Income is a, major concern for you with this asset, 180,000 non-qualified." And he said, "Yeah, absolutely. I need to try to get the highest income." I say, "Okay, well, tell me a little bit about the product that you bought." He says, "It's this North American, Charter 10, he called it. It had a 5% premium bonus. It's got he didn't know much about the income rider, but, he told me how much it was going to pay him in income at the end of 1 year, okay? He didn't know anything about the caps, and that's not uncommon. And he didn't really know too much about how much the income riders cost." I said, "No problem, great." I said, "You know what? That's a great product that you bought. However, I think as David told me a little bit about it, I think I have a better product for you. And I can show you," and so we started talking about the differences and similarities between the two. Not that the North American Charter 10 is bad, it just happened to be the one that the client bought, okay? And he didn't even get it delivered to him yet. So it was a prime opportunity. I said, "Hey, you don't have to stay in this one. If I can find you more income, would you like to take a look at this product?" And he said, "Absolutely." I said, "Okay, great." So in my mind, as David talked to me before we got on the phone with the client, I had already made up my mind. Knowing all the products out there, knowing what they pay, knowing what the roll-ups are, knowing what the payout percentages are, knowing what the comp is, my mind went to, in this case, the index bonus 115 with forethought. Okay, we're an advisory board member with forethought, and this product just made the most sense. Had a 15% income bonus. If a client within the first 13 months triggers income on that product, it's guaranteed at age 71 to be 6% for a payout factor. This was a case I did back in January, and I immediately thought of doing this at this conference. So it is 5.5% now. It's a 6% roll-up, and it had caps that were in the mid-threes, pretty much in line with every carrier out there. And it had a 95 basis point charge based on the account value. This is one key feature that I really talked about with this client. You know, the 95 bips on the North American is based on the income value, and it's a static fee. Stays exactly where it's at, never to go down. So as the account value goes down, your fee is going to be the same. You know, clients out there are very fee-centric, okay? So the forethought is 95 bips based on the account value. Well, we all know as you turn on income immediately after 1 year, your account value is going to come down, right? So would you rather have a fee that's reducing? Most clients are going to tell you yes. So what I did was I told this, you know, as we talked about this product with this client on the phone on this conference call with him, I said, you know what, I'm going to hang up with you, and what I'm going to do is I have this software that we have on our website that's going to be able to show you, number one, the caps are higher. The North American was set at 2% today. So I knew that back testing, utilizing our Insight illustration software tool was going to show, because Forethought's cap was almost twice as high. It was about 3.5%, 3.75 at the time. I knew it was going to show that the rate of return would be better. I knew the income was going to be higher. I already explained to him the fees were lower, okay? A fee based on the income value versus a fee based on the account value. And most carriers have them based on the income value. It's not uncommon. But in this specific case, I was in competition with another product that a lot of times I sell as well. So, so what I did was hung up the phone, and I went to the tool on the website that Rich showed you where it was earlier, under the Annuity tab, under Annuity product search, and up in the top right corner, you see it say Insight Illustrations. You go and you have to request a registration, and Eric will say, no problem. We can do it for these carriers here. So I did that, and and this is the Forethought front page right here, and you can see that just under the best period return, it says 3.13. You know, it was a 3.5% cap, I believe it was. You know, what this software does is it takes today's cap and it back tests it. You know, so if 5 years ago the cap was at, 6 or 7%, it's not going to show that, but what it's going to do is say, hey, you know what, we're in one of the worst, cap environments that we've had in quite some time, especially since I've been in the annuity markets. So I feel pretty strongly that they will recover as interest rates recover and as the cost of options, come down. So under this, you see that the best period value is 3.13, okay, for the Forethought. On the North American, 2.5%. Okay, you got a 5% premium bonus up front. It certainly helped a little bit with the rate of return. So right off the bat, just if you showed an illustration, just back testing the same best period on those two products, you would have gotten a little bit better performance internally in the contract. So now, there's two features that this specific recommendation is starting to make sense now. Number one is you could have a better return internally. Number two, the fees are going to be a little less. And I know they're going to be less each year, okay? So right off the bat, the case is really starting to get formulated. The third and one of the most important features, and this is what the client told me, yes, you know what? I hear all the time from agents, what do caps matter when I'm turning on income? Well, you know what? They do and they don't. Income can be the most important feature to a specific client. However, the caps are there if the higher caps are there if the client ever changes their mind. What I tell agents is it's a way to help sustain the asset much longer. Because you can, even though you're taking distributions, you're not annuitizing, and that's, a lot of the benefit of having these income riders is the non-annuitization. And so you have interest getting credited each year. So if you're taking out $7,000, maybe you get it credited back $5,000. So that's a net loss of $2,000. So again, helps sustain the asset much longer. In this illustration, if you could put it back up there, What I did was I took a snapshot of both illustrations that I ran. I ran the chart of 10, I ran the forethought 115. Again, this client told me his number one concern was income after 1 year, keeping an income rider. You can see with the forethought, the income payment at the end of 1 year was $13,165. With the North American, $10,716. Right there. Again, clients are always going to tell you, and this is, having some marketers like Rich and I who had background sitting with clients at the kitchen table and understanding that, if you shut up and you listen to the client, they're going to tell you exactly what you have to say to them or what it is that's going to make them want to purchase a product from you. They're going to tell you if you just listen. So a lot of times when I ask you questions, I'm just trying to listen to what it is that your client told you that's going to make them want to buy this product. In this case, the number one thing was income, regardless of the other two factors. Now we have three pieces that make this recommendation more sense, makes more sense than what the client bought. Not that it was a bad product, but there was a better product that the agent didn't sell him. So my job as being a marketer was to call me to get the competitive nature out to help solidify the case for this client. And a $180,000 case, I don't know about you, but is a pretty solid case to a guy who mostly does life insurance and was just looking to get into the annuity markets. So, the forethought in Florida, this particular product was a 7% commission. At $180,000, we're almost talking about $14,000 of commission. That's pretty nice. So, do any of you have any questions in regards to working with a marketer? Any questions, about the software? Anything else in particular?